What's up, apes? Tesla is back to killing it once again, and we have plenty of other stocks to talk about here today. Before we get into all that, we are going to be breaking down Mr. Jamie Dimon, the CEO of 𝗪𝗪𝗀𝗀𝘁𝗧, his shareholder letter that he sent out over this past weekend. A little bit late on that because it's pertinent to just 2023, so we'll be breaking that down. We'll cut him some slack because it's a little bit late, and that guy, I mean, he's the most silver fox guy on Wall Street that's not named Mr. Jerome Powell. So we'll cut him some slack. We'll break it all down for you guys in just a minute. Make sure to stay tuned for some of our thoughts on a lot of the stocks that we're going to be talking about today. And of course, we'll finish things up by telling you guys about what exactly consumers expect going forward. We get the latest consumer expectation report from the Federal Reserve Bank of New York. They're breaking down everything from inflation to the labor market, wage growth, and other absolute nonsense that consumers have no business talking about or speculating on. But of course, we're going to get into it all because it's fun, and that's what we're about here at the Daily Peel. Before we do so, let's go ahead and take a victory lap, everybody. Round of applause, because the WSO Alpha portfolio is once again killing it to start off this week. Like I said, guys, we were taking it easy on these indexes at the beginning of the year. We wanted to give them a little bit of a head start. Can't let you guys see our true talent just yet. I mean, we don't want to embarrass like Warren Buffett and Jim Simons and all of them too badly, but we were up 45 basis points on the day. Huge help from Tesla, 𝗪𝗏𝗄𝗏, which we have a report coming out on in just a couple of weeks as well. And then we actually got some support from Zillow there too, which has been down bad recently, but we recently published an alpha report, very bullish on Zillow as well. So guys, make sure to go check out all of that stuff on the WSO Alpha page on our website so that you can bully or get rich with us at the same time. We definitely want to see you guys there. We're actually launching a Discord server here as well that everybody can come join, shoot the shit about markets, bully me, bully Patrick, everybody. Do whatever you want, really. Like I said, the main point is to have fun. So we'll be getting into all that in just a quick second. Like I said, we did outperform the indexes on the day. However, it was a very good day. We were up 45 basis points, and we saw the S&P actually fell about 4 basis points on the day. Meanwhile, the NASDAQ was up just an absolutely abysmal 3 basis points. Actually, Jesus, thought it was a little bit more than that, so I'm very surprised to see it. But either way, great day for the Alpha portfolio. Hopefully that continues throughout the rest of the year. Now, before we get into some of those big ideas I was just mentioning here, let's go ahead and get into some of the banana bits, some of the smaller things that, we want you guys to have on your radar, but I don't care about enough to actually write about. Now, first and foremost, we had Mr. Torsten Slok. He's like the chief economic officer, that would be CEO. So I think it's something, chief economist is what it's called. He's the chief economist at Apollo Global Management Company. I'm sure you guys would all kill your firstborn child to go and work for. I know I would. Now, he said the U.S. infrastructure is at its worst that it's ever been. In the history of the United States, it's never been this bad. I thought we just passed a multi-trillion-dollar infrastructure bill. I guess, they're sitting on their asses, not really doing anything about that. And why should we be surprised? Again, this is the federal government. They get paid to do basically nothing. So, obviously it's exciting to see that we have a bill in place to fix up all that stuff, but god damn it, just fucking get started on it already. I'll go and fucking build a bridge if you want me to. I mean, everybody that drives on it is going to die, but I'll do it still if you need me to. Now, of course, related to other bills that we've passed under the Biden administration, we have Taiwan Semiconductor Manufacturing Corporation, or TSMC, as, non-nerds like to call it. They're getting a $6.6 billion paycheck to go ahead and build a chip-making facility and some kind of plant. I don't know. It seems like a really complicated operation out in Phoenix, Arizona. So if you're in the area in Phoenix and looking for a new job, go ahead and learn how to make semiconductors. That seems nice and easy, right? There's probably a couple of YouTube videos on that kind of stuff. Now, of course, moving into some more stock market-related news, we had a report come out that says basically the Magnificent Seven, the Mag 7, as the cool kids like to call it, they are expected to underperform emerging markets in terms of earnings growth by Q4 of this year. That is a very bold call considering how shitty emerging markets have been for the past ever. Now, obviously the Mag 7, they call them magnificent for a reason. So we'll be surprised if that actually comes into fruition, but I guess what goes up must come down eventually. So we'll see exactly what goes on with that, but a very bold call that we'll all want to check out. And finally, CNBC yesterday published they went ahead and did the work that really nobody else on earth would ever want to do, poured over SEC filings and basically gave an exact breakdown of the payouts that all the executives for Trump's fake company, Trump Media Technology Group Corporation. I still laugh every time I say the full name of that company, but basically they're giving a full breakdown of TMTG executives and exactly the kind of payout that they got with this company going public, because I'm pretty sure every single one of them made more money in their own personal bank account, whatever the fuck else we want to call it. Pretty sure they made more money in their own bank accounts than Trump Media Technology has made in its entire history. Now, like we talked about in our video breakdown of TMTG, there are ways that this company could become a real economic thing, but obviously it's not right now because it is a complete joke. But go ahead and check that out as well to see our wild speculation on exactly what this thing could come into. All right, let's go ahead and get into the big story of the day. We have Jamie Dimon's 2 cents. So Mr. Dimon, everybody sees him as a 10 out of 10. He's an absolute dime, and we're breaking down his 2 cents right here. Now, the printing press, electricity, we got a bunch of other shit like that, and apparently artificial intelligence is going to have a similar impact, at least according to Mr. Dimon. That was one of the biggest takeaways from his report. I actually sat down and read this 63-page report, and don't get me wrong, I wanted to strangle myself the entire time that I was reading it, but this is what we do for you guys so that we can break it down in an intelligible manner here. So basically, obviously, these shareholder letters that these CEOs send out, now, they serve a couple of different purposes. The primary purpose, allegedly, is to update shareholders on the business, on the company itself, and say what's going to be impacting it going forward. Really, what they tend to do in these things is pseudo-philosophize, if that's the technical term for it. They like to pretend that they're the newest fucking Socrates, and they're coming up with all these brilliant ideas, especially 𝗪𝗲𝗪𝗀𝗪𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 fortunately for us, Jamie Dimon actually has some tangible things in there that he says that can be materialized and not just kind of wild speculation out there. So, first and foremost, he begins by talking about how fucking sick JP Morgan is, which is just objective. I mean, the stock has been killing it. It's the most valuable bank in the world. They have the most assets or most, yeah, I'm pretty sure they have the most assets under custody for any bank in the United States, if we're including, investment assets as well as banking assets combined. Pretty sure JP Morgan still leads the way under that regard. But basically, one of the first things that he came out here and focused on was the impact of artificial intelligence. JP Morgan Chase has already hired 2,000 dorks, employees that sit there and work on artificial intelligence and machine learning type of stuff. So they have hired all these people. They are investing heavily in that regard. Over 400 different use cases have already been identified for the bank. Everything from fraud detection to customer service and a whole bunch of other nonsense that, you would typically overpay people to come in and do. Now they're going to have computers be doing it, or eventually down the line. This definitely makes sense in context of the IMF report that, artificial intelligence is set to impact the economy by about $15-16 trillion by 2030. It's going to be adding about that much to total global productivity. So obviously that's a huge win. Now the question is how jobs kind of rebalance afterwards. If you ask me, this is just like when the printing press was invented, or it's just like when whatever farming equipment was invented so that you could harvest a hell of a lot more without needing, individuals to go out there and do things at times without pay. Now, I basically see this as kind of a very similar thing. People were freaking out back in the day when the printing press came out, when a lot of these farm tools came out, that there wouldn't be any more farmers, or there wouldn't be any more scribes, or anything like that. And the whole global economy was going to come to a collapse because all of a sudden we didn't need monks to scribe every book ever anymore. But Jamie Dimon, myself, a lot of other people that are way smarter than me, just like Jamie Dimon, basically all seem to think that artificial intelligence is going to be another productivity unlock, and there's going to be jobs built on top of this. I don't see why this technological revolution would be any different, and don't come at me with that universal basic income bullshit either. Now, Jamie did go ahead and talk about some other stuff going on within JP Morgan and just much more broadly in what seems to be an early bid for the presidency in 2028. We'll see if that actually comes into fruition, but inflation was the next big topic of the report. Dimon kind of went out on a limb here. He's taking a stance against the consensus viewpoint, basically saying that we are far from out of the woods just yet. Most people are focusing on the Fed's balance sheet. They're focusing on interest rate levels and the monetary push for inflation. But Dimon says we got to focus on the fiscal side of things here too. When governments are running enormous deficits and spending money that they don't have, that is the definition of inflation pressure building actions. So that's exactly what we're seeing the U.S. and governments around the world do. Dimon is basically saying that if we keep seeing these huge deficits, especially with all these industries that we got to make huge investments in over the next couple of decades, like the green transition and like all this other stuff, that is exactly how you push up a national inflation rate and devalue the shit out of the currency value. So watch out if you're the U.S. dollar. Bad time to be it, according to Mr. Jamie Dimon. High energy costs are also going to have a big impact on that as well, because energy is in this kind of weird state globally where, of course, renewable energy is going to be a lot more expensive, at least in its current form right now, because it hasn't exactly reached that scale. And in order for renewable energy to reach a scale where it's cheap enough that it can actually replace oil and gas, we're going to need a shit ton of oil and gas to power up and actually get started on these green energy locations in order to get to that starting point that Greta Thunberg and everybody else so desires. Now, it's a bit of a, what is that called, like a catch-22 or something like that? I think that's how an old person would reference it. But it's obviously kind of caught in that dichotomy. We'll see how that goes going forward. Now, Dimon did go on to talk about things like the commercial real estate crisis, basically said that it's not really a crisis unless, things get really bad. Like, basically the exact numbers that he put out there were, if rates skyrocket past 6% and we are heading into a recession at the same time, that is when JP Morgan will start to get worried. They do have that luxury, whereas more regional banks that have a higher portion of their loan book exposed to the commercial real estate market, they're going to be fucked much earlier to that. Just look at New York Community Bank. Now, in terms of geopolitics, few people are as red-blooded American as Mr. Jamie Dimon, and definitely few CEOs, and definitely very few CEOs of Wall Street are as red-blooded American as Mr. Jamie Dimon is here. So we love to see it. He basically came out and said that, what the fuck is the United States doing? We need to stop being like depressed about ourselves and start actually kind of investing in what's going on. He pointed out that, let me see the exact quote. He said that these nations, other nations that he described as dictatorships, largely see the West as weak, incompetent, and disorganized. And I mean, he is obviously right. If you look at, Russia, China, the things as they say about things like the U.S. military, he's very concerned about what this means in terms of national security and is basically imploring the U.S. government to worry about these things going forward. Again, like I said, guys, this is an early presidential bid, it seems like. Now, in terms of bank regulations, he basically said that bank regulators are a bunch of dork losers who won't come together with the people who actually run these banks and figure out a best case scenario for everybody involved. That was a big part of the report as well. Now, the key takeaways here, there's a lot going on. Like I said, it's a 63-page report and it's an incredibly boring read, but there's basically 5 big takeaways. First and foremost, JP Morgan absolutely still killing it. They are still the Death Star of Wall Street, corporate America, and corporate entire world, if you ask me. Artificial intelligence trend kickstarted by ChatGPT. It is as real as it gets. It's up there in terms of the fucking discovery of fire, I think, is one that he actually left out in that report, but still basically saying that it's on par with those discoveries. He said the U.S. in Dimon's view needs to fucking grow a pair and start prioritizing the well-being of citizens and worrying about national security and not just how everybody fucking feels all the time. Now, of course, we see the banking system related asset classes are fine for now, but watch out below because we're kind of at a point where, if we did push it over the edge, obviously things aren't going to go too well from there. Now, he gets a little bit less specific than that 6% interest rate mark, so that portion of things was kind of more hypothetical and a little bit less intangible to understand, but definitely still worth checking out. Finally, he basically said regulators are a bunch of dorks and banks need to be allowed to gamble a hell of a lot more. We're all for the gambling right there, so shout out to you, Mr. Jamie Dimon. Great letter, even though I wanted to rip my eyes out while I read it. All right, moving into some of the big stock movers of the day. We have Spirit Airlines. Very surprised to see they actually had a good day. I had written this company off as already bankrupt after the collapse of that JetBlue merger, given how absolutely disgusting this company's balance sheet is. But basically, Spirit is trying to save itself as much as it can. They went ahead and told Airbus. Airbus is the plane manufacturer that builds planes that actually stay together, unlike Boeing. So, airlines have these two options of which one they want to purchase from. So Airbus, they actually keep their planes together. Radical idea, I know. But Spirit basically said, you know what? Why don't you hold off on a lot of those planes? Meanwhile, let's furlough 260 pilots. And in doing so, they are going to save $340 million over the next 2 years. And they expect that enough to keep them out of Chapter 11 or Chapter 7 bankruptcy. We'll see if it comes to fruition. Investors were hyped, sent the stock up 6.8%. Sofi Technologies was up about 4.9% on the day. They were killing it. They've been getting a lot of love lately. It's very much like when, an ugly person like me in school comes back after the summer and they have contacts instead of glasses, and now they're the hottest thing on earth. That's basically what Sofi is looking like right now because the stock has been brutalized getting into this year and over the past years in comparison to broader markets. But they've gotten 3 upgrades in the past week, including one from Citi yesterday that kind of held the most weight because the other upgraders were kind of these no-name banks and, all that other bullshit. But Citi came out here and slapped an $11 price target on it. They're trading sub $8 even today after this rise. So definitely still some decent upside if you can buy in on that. Personally, very bullish on SoFi. We might even be doing an alpha research report on that stock coming out soon because I don't really know why I'm bullish, but I feel something good about the company. So I want to take the time to go ahead and break it down a little bit. Speaking of which, let us know what companies you guys want to see us break down as well because we're all for that. We have a lot of fun in making those videos and seeing your comments, your thoughts. Exactly what companies you guys want to see next. So we have one on Robinhood coming out tomorrow. Stay tuned for SoFi and let us know any other companies that you'd like to see. Now moving on down below, we have Trump Media DJT is the ticker symbol. Keep that in mind. This company was down 8.4% on the day because it's not a real company. They don't fucking do anything. They don't make any money. All this is here for is a bailout for Donald Trump's legal fees. And again, if that's your thing, if that gets your motor going to kind of invest in something like that and support the former president in this, let's just call it whimsical or ridiculous legal battle that he's involved in. If you want to contribute to that and fucking stick it to the New York AG, Letitia James, go ahead and buy the stock. Just please don't make any money off of it, because I promise you it is going to perform worse than Nikki Haley did at the primaries. Now, moving on down below into our final stock mover of the day, we have Paramount Global. This thing has been one of the hottest stocks in the market lately because basically they are selling it. Now, most of the time, companies do well when earnings are growing or, they have a new promising area of growth going forward. But Paramount is doing really well because there's going to be a new owner. Mr. Sumner Redstone, this is the guy that built Paramount, or really National Amusements, which is the owner of Paramount, Viacom, CBS, and some other nonsense brands like that. Sumner Redstone is the guy who built these things from the ground up. He recently passed in late 2023, and so his 80% ownership of National Amusement went to his daughter Sherry Redstone, who at the time owned 20% of Paramount Global and National Amusements more broadly. Now she controls 100% of the company that owns Paramount Global, or owns the non-public float of Paramount Global. So she has all the power in this decision. Basically, she has been speaking with a consortium of investors led by Skydance Media, and including companies like KKR and like Redbird, other private equity firms I'm sure you guys would kill your firstborn child to go ahead and work for. And basically, she's been coming close to a deal with them, but we had a shareholder who was pissed off about that. Basically, Matrix Asset Management came out and said, fuck all that, this is a terrible deal, and you're going to fuck us over. It only helps Sherry because it just basically lets her get the fuck out, which is all she really wants to do at this point, it seems like. So Monday's sell-off came as a response to what's now foreseen as a much longer merger process. We'll see if it actually plays out. Very much looks like it's going to at this point, but it's very clear that the owner of National Amusements, again, Sherry Redstone, kind of wants to get out as quickly as possible, and shareholders are making sure that they don't get completely fucked over in that process. So once again, this is going to be an interesting court or boardroom battle. Definitely stay tuned on that one. But meanwhile, let's go ahead and talk about consumer expectations. Expect the expected, because that's exactly what consumers did in the last report on consumer expectations. So the Bank of New York, or the Federal Reserve Bank of New York, I forgot Bank of New York is a real company. The Federal Reserve Bank of New York came out here and released their latest survey on consumer expectations going forward. So the big things in focus are inflation, job markets, wage growth, all that other stuff that these consumers have absolutely no business discussing. But of course, nothing really changed too much, and that was really the big story in this report. Inflation expectations held steady for the third month in a row at 3% for the next 12 months. Consumers have been expecting inflation to rise 3% for the next 12 months for the last 3 months. So basically expecting, I think you guys get what I mean in that front. Now, we actually did see an increase on the 3-year inflation expectations and a decrease in the 5-year inflation expectations. So obviously none of that makes any sense. But like I said, these consumers have absolutely no idea what they're talking about. So it's very interesting to see what's going on here. Not that I have any idea what I'm talking about either. I mean, come on, give me a break. But still, very interesting to see how the average civilian who couldn't pick Jerome Powell out of a lineup actually thinks about the economy going forward. The biggest thing in this report was uncertainty around the job market going forward. Now, specifically, there was one line that jumped up quite a bit, and it's actually at its highest since fall of 2020, and that is the expected probabilities of losing your job. Not quitting your job, being fired, or being laid off. Basically, losing your job for some reason that's outside of your control. And that jumped up to the highest level that it's been at since late 2020. Obviously, consumers are feeling a little bit rocky, and with that, you would kind of expect to see a decrease in expected earnings over the next year. We did not see that at all. That held steady at a 2.8%. Now, that's pretty strong. Obviously, it's underperforming their inflation expectations, so consumers are, by definition, saying that they expect to be a little bit poorer on an earnings basis in a couple of years. That is definitely not the kind of confidence that my parents told me to have, but I guess that's what we have in the United States right now, and given the state that everybody feels about the country, the economy, and the future, can't really blame them for it, because it seems like everybody's just depressed as hell out there. But like I said, guys, we're here to have fun over at the Daily Peel. That's kind of our summary for the day. Let us know what you guys think in the comments and what other companies and other shit you want to see us yap about. Now, of course, before I let you go, one quote to finish up the day. Mr. John Maynard Keynes, great monetary economist back in the day. He's the guy who's kind of credited with creating this idea of quantitative easing, quantitative tightening, and the idea of modern monetary theory more generally. He's the guy who first came out and said, hey, this might actually work, and I guess 100 years after he passed, countries were actually crazy enough to go ahead and try it. But he said, by a continuing process of inflation, governments can confiscate secretly and unabsorbed an important part of the wealth of their citizens. This is what we mean when we say that federal spending through deficits is driving inflation, and in doing so, you're destroying the wealth of your citizenry, citizen base, whatever the fuck the word is for that shit. I've been rambling for way too long here, so we've definitely fallen off a little bit, but guys, thank you for staying with us. It is currently 9:11 p.m. 9:11, never forget, guys. It is 9:11 p.m. here on this beautiful Monday, April 8th, 2024. Stay tuned for tomorrow. Make sure to check out the peel so you can see some of the charts that are included. And like I've said a couple of times here now, let us know what companies and other stuff you want to see us talk about. We'll be more than happy to deliver as always. Thanks for joining us here today. Happy investing, happy trading. Have a great rest of your week. See you tomorrow.